Okay, Johnson.
And that's what it is.
Thank you, Segun. Johnson. Emefiele talked about the fact that he plans to gradually reduce interest rate. And we have his predecessor, Sanusi Lamido Sanusi, who is now the emir of Kano, having to raise interest rates, as a way to fight inflation and also try to create that balance between exchange rate and interest and inflation. Now, how do you think Emefiele can create a balance? Because if he reduces interest rate over time, I do not know how long or how well or the yardstick is going to use to achieve that. How do we create the balance and have a stable exchange rate alongside it?
Okay, I'll take that. I also make some comments on what Segun has said. It's going to be a delicate balancing act in the sense that for you to drive down interest rates, you have to look at the impact on driving the interest rate on your inflation rate and your exchange rate. Today, we have a foreign reserve of $36.82 billion. Yes, in as much as it can cover up to 9 months of import, but a significant component of that foreign reserve is made up of direct portfolio investment, foreign portfolio investment.
So we're still going back to square one as to what Segun was trying to explain.
If you have a reversal of flow, and then the foreign portfolio investors are exiting the market, you're going to have a pressure on your exchange, on your reserve, and the pressure will dovetail into a shift in your exchange rate. So it might be a very difficult, delicate thing. But he also said subsequently that the reduction of interest rate is going to be a very gradual process, and that what he gave is a 5-year plan. So it simply means that maybe before the reduction of interest rate would begin to take place, the reserve would have been built up. He said he's going to encourage the federal government to build up reserve, aggressively build up reserve. In as much as he does not have any direct authority or line of authority doing that, the only way Nigeria can grow in reserve in the immediate future is if we address the problems in the Niger Delta. Okay, if you continue to allow the stealing of oil pipelines, the shorting of crude production, then it may be difficult for Nigeria because you're not going to diversify your export base overnight. It may be difficult to grow the reserve. If the reserve is not high, then it may be difficult for any CBN governor to successfully reduce interest rate and at the same time maintain exchange rate.
So there are conditions for actually cutting down on interest rates.
Yes. So for you to, because basically if you look at where is your reserve coming from, it's basically coming from mostly foreign portfolio investors. And they are coming to Nigeria because our return yield on federal government instruments, debt instruments, are attractive. And what they are doing, they are enjoying arbitrage income. They borrow from outside the country, they borrow from US banks and European banks at less than 5%, and come and buy instruments at 12, 13%. So they are enjoying the spread. So even if you have a minor shift in the exchange rate, it does not completely erode the arbitrage opportunity they are getting. But if you drop interest rates below a certain threshold, then that arbitrage opportunity will vanish, and they won't have any motivation to come to your market. And that the inflow of foreign reserve, foreign exchange that is supporting our ability to defend the naira will reduce. And what happens here, you may even see a reverse flow where they are selling down their Nigerian government instruments to exit the market, and that will put a lot of pressure on your reserve, which will also, like I said, put pressure on your exchange rate. So it might be difficult for the CBN governor today to successfully bring down interest rates and sustain current inflation rate and current exchange rate. Something we have to give in. Unless, as he said, he's talking about a 5-year plan, and then the reduction in interest rate will begin to take place when we're able to build back our reserve. The Minister of Finance said recently in May that the amount that Nigeria is losing on a monthly basis from crude oil theft and shorting is about $1 billion monthly. So it simply means that in a single year, you're losing about $12 billion. So if the government can stop that, which the CBN governor does not have powers to do, if the government can forestall the abuses or the breaches that we're suffering, the country is suffering in terms of oil production, then it is possible that our reserve will grow back, and then the CBN governor will have enough war chest to bring down interest rate and defend the naira when it comes on that.
War chest. All right, I would like you to just hold your thoughts for us for a moment. We're going to go on a break. We've been talking to Johnson Chukwu, the CEO of Cowry Assets Management, and also the head of development finance at Heritage Bank, Segun Akanji. He'll be talking about development financing by the central bank. We'll be right back.